Morning, Market Chameleons. How you doing this morning, Dima?
Good morning, Will. How are you?
I've left the corner wall and Broad, and now I'm in Sydney. They just hit New Year's Eve last hour in Sydney,
Really?
Australia.
Oh,
Yeah,
that's
cool.
a beautiful background.
Yeah, no, it's
Really nice.
I know a lot of places are not having fireworks or anything tonight, but it looks like Sydney was somewhat celebrating. That is a shot of the actual fireworks. It's amazing.
Wow.
All right, with that, you want to start with the disclaimer?
Yep. Good morning, everyone. Thanks for joining. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer, everyone. And
excellent.
With that,
what do you have for us on this last trading day of 2020, D?
Yep. So I think today what we'll do is look at the pre-market report as usual, see if anything's moving in the pre-market hours. We'll take a look at what industries yesterday performed well, see if we could detect where money has been flown from the perspective of just yesterday's trading. We'll take a look at really quickly anything that's popping up on the unusual option volume report. I'm also going to take a look at the implied volatility movers, see how those straddles, the implied moves, are lining up compared to historical average moves. And if we have any questions along the way, just let me know. I'll try to get those to get to any questions that are coming in.
Great.
So this is the pre-market report. Stocks moving in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to filter this report really quickly to see what's going on in the higher market cap stocks. So let's take a look at $20 billion market cap or higher. So we see you got 6 that made the percentage gainers list, 6 on the percentage decliners. Nothing really big is popping out at me right now. We do have some movers, but not on very heavy volume. This 366,000, BIDU up 3.4%, 181,000 shares trading hands. Tesla, I think that's trading 520,000 shares in the pre-market hours, up 700, now up 1.2%. Let me just see if that's a new 52-week high. I'm just going to take a look really quickly if I could detect 52-week highs. So yeah, so 4 of those are making 52-week highs: BILU, BIDU, PDD, Tesla. If they open here, that's a new 52-week high in those stocks. Let me do the unfiltered report. Oops. This is the unfiltered report. We do have a couple small cap stocks moving up in the pre-market hours, HOTH, AINC. Just to save some time, unless there's questions there, I'm going to move on to cover some more reports that we might get into bigger detail. So if you don't have any questions on the pre-market, Will, I'm going to move on.
Yep, you can move on. You sure
Right.
You don't have that new strain of COVID? You sound awfully sniffly.
You know what? Right before we started, I sneezed, and like right after you sneeze, I feel like it doesn't go away.
Yeah, next time get that on air so we can put that over TikTok or something.
All right, sorry. Let's take a look at. Let's go first to the unusual option volume, see what popped in there. We haven't looked at this in a while, so we got WBAI. That stock was up 32% yesterday. We see that it traded, 2,450 contracts. That's compared to on an average day, it trades 129 contracts. So that's like 19 times its average. We see $203,000 worth of call options traded versus 53,000 puts. And that implied volatility was up yesterday, 34% to, it's in the 100 percentile rank. So that was up yesterday. NXTD, that traded yesterday over 18,000 option contracts. typically trades around 2,700 contracts per day. So that's 7 times its daily average. We see over $500,000 worth of call option premium versus 150,000 put. That's like a low price stock. So, but that was up 29% yesterday. DMTK, I'm not familiar. Let me see. This is a low cap stock. Let me see here. So diagnostics and research, it's in the healthcare industry. Stock was up 27% yesterday. We see traded almost 5,000 option contracts, typically trades around 300 per day. That's 15.7 times its average daily option volume. $1.7 million worth of call options premium traded yesterday versus 390,000 put option premium. And that implied volatility you see was up 40% yesterday to 134. And that's in 100 percentile rank. And basically, when we're seeing the implied volatility rising and the stocks moving, this is saying that that market is anticipating higher percentage moves going forward. Basically, that whatever this move was, it's not completely over. Didn't really reprice to and potentially just stop here. Markets are implying that there's still volatility ahead of us, especially when you're seeing 100 percentile rank, 94 percentile rank. Because to contrast that, after earnings, you'll typically see a stock move, but the implied volatilities come in, right? Because the event is over, the stock gets repriced, option premiums come in. So you would see this after earnings, maybe you see a big pop, but then you would see implied volatility come back in. Here, these are implying that there's still more to go. QD, let's see what they do. Actually, this is a low price stock. Let me skip that. Let's go to BILI. Let's see what they do. Electronic gaming and multimedia. So we see here traded 62,000 contracts yesterday. Typically trades about 16,700 on an average day. That's 3.7 times its average daily volume. $21 million worth of call option premium traded versus $3.4 million worth of put options. That stock was up 14.4%. We see here implied volatility ticked up a little bit, 9%. That's in the 59 percentile rank now. If you don't, let's do this one. BIDU, because I did see it in some. I'm trying to remember which report I saw. Did we just see that in the pre-market report?
Well, it had sold off recently with kind of the BABA news out of China.
Okay.
And we were looking at it. I forget where, but it was maybe in the unusual. Maybe it was in the pre-market report in the stock moving.
Was it? Maybe it was. Yeah. Okay. Yeah. That's why I was trying to recall where I saw that. So BIDU yesterday traded 372,000 option contracts. That's compared to, on average, it trades 43,000 contracts per day. So that's 8.5 times its average daily option volume. $185 million worth of call option premium traded yesterday versus $27.8 million worth of put option premium. Stock was up 12.6% yesterday. Implied volatility was up 19.3%. That's in a 95th percentile rank. Again, that's options are implying that there's, big percentage moves ahead of us still. Up or down, I don't know if it's up or down, but the option premiums are implying bigger volatility.
Can you look at BIDU and see if there's anything showing up with trade ideas with Edge?
Okay, let's take a look at BIDU. So this is BIDU. Let's take a look at trade ideas. So a couple of them showed up. So they're credit iron Condor. This here, because the option premiums are really high. Remember, this is non-directional. This is selling out of the money call spread, selling out of the money put spread. So you could see here that's selling 215 put, buying the 205 put, selling the 230 call, buying the 240 call for $5.05 credit. We think historically it's worth $2.97. So that's a 42% theoretical edge. Historical probability of success, 73%. Credit iron butterfly, that's similar, except you're doing the straddle and buying the wings. Let's look at, here's a bull put spread. So bull put spread would be a bullish play. So this is saying selling the 205 put on January 29th expiration, buying the 200 put January 29th expiration for $1.30 credit. We think it's worth 43 cents. So that's a 23.5% theoretical edge. Historical probability of success, 92%. So those are the top three. Of course, you could just pull this down and look through the ideas that, you know, any one of these strategies. But those are the
Very
top
cool.
three. Let's move on from the unusual option volume. Let's take a look at, let's see which industries yesterday performed well. So stocks, I'm going to go here to performance by industry. So here we have a list of industries here. So these are the names of the industries. You know, this is Morningstar's classifications. This is the number of stocks in that group. This is the percentage of stocks yesterday that were up in that group, percentage that were down. Then we have the median percentage moves, you know, yesterday and then historically. So let's take a, I'm going to sort this by best percentage median move yesterday. So the top of the list, silver, has 7 stocks in there. All of them were up yesterday for a median gain of 6.1%. And again, we've been seeing these silver, right? When we come in here, we've been seeing them a lot of times popping up in here, showing all of them were up. So basically, you know, investors are going after that group, that industry. And these are pretty big percentage gains, actually, 9.8%, 8%. Copper right underneath it.
It's amazing because the SLV is still 3 points off its 52-week high, you know, which is a pretty big move. The silver ETF.
Yeah. And I don't know, like, how those commodity ETFs, because I think that they're dealing in with like with futures. Are they rolling futures?
I think they are. And then they get, you know, they get squeezed because everyone knows in their prospectus when they roll. And
yeah. And I think that when you roll, just like the VIX, there's like a, you know, that contango thing going on where the futures, you know, are, you know, it's not like a flat curve, right? There's like it slopes down. So when they get out of the one future and go into the next future, they're selling it lower and then buying it higher. So there's like a cost of rolling it, you know. So those ETFs, you got to be careful, read how they're structured, because sometimes just rolling those futures, there's a big cost to it. Just like on the VIX, right? There's a big cost of that roll from one future to the next as it's getting closer to expiration. Copper, we saw that there's four in there, up 4.9%. Department stores did well yesterday. It seems like, you know, 71% of those were higher. Median gain 4%. What's that betting on the recovery? Here, Macy's up 4.5%. I mean, I'm surprised how far, you know, they've actually come back from their lows.
Yeah, considering Europe is, I mean, we were talking about it a little bit off air. I mean, the fact that they're starting to shut down certain countries, they're back to level 4 in Britain, in most of the country, which is, you know, complete lockdown, basically. Everything's shut down.
Yeah. But look, we see silver, copper up, aluminum, you know, 100% of those up, gold stocks, 45, 91% of them were up. So these are like, just, to me, it looks like very just inflation expectations just keep moving higher. I mean, right now, what do we have, a stimulus, and they might increase are they talking about increasing the stimulus they just passed?
Well, there's a thought of giving every American under a certain level $2,000. So for I think a family of 4, it's let me do the math in my head. I think $8,000 if you hit that.
Oh, it's 2,000 like for
per
even
family,
for the child?
yeah, per person
So
in a
it's like
family.
the helicopter Ben theory, right? Just drop money. I don't know. We have to look back at history and see when that's been tried before and what happened to those economies when you just keep printing money. You need productivity, right? Eventually catches up to you if there's no productivity and you just keep printing money. But
it's trying to push a string. I think some economists have said in the past, or maybe that was Goat who said it once. It's it's hard to do. And then listen, you see the move in Bitcoin. I mean, people are chasing assets now with their dollars.
Well, we were looking yesterday at the valuations of stocks and going like, whoa, what's going on here? Some of it is just, but yeah, a lot of cash just chasing fewer assets. That's what we're seeing. But here, look, silver, copper, aluminum, gold, precious metals, all of them were up yesterday. Semiconductors, those look pretty good. Those were I've been seeing that popping in there a couple times now. So let me just see which ones performed the best in here. HMX, so some of these are lower cap stocks. But I think Intel is Intel in here?
I mean, it's amazing because Intel is still pretty close to its March lows. It's amazing.
Yeah.
Like I don't.
Yeah. Look at Intel's performance right here. And what is the group median? You see here, all of them, all green, Intel all red.
Well, I think part of it is maybe I've read bits and pieces. Apple is producing their own chips.
Really?
Maybe Microsoft. I mean, it's so.
I remember Intel was the lead. Look, here's by market cap. So what is it? NVIDIA? NVIDIA is now higher than Intel. Is that correct? Qualcomm is like close by. Qualcomm not far away.
It's certainly reflective in their stocks.
Yeah. Well, let's take a look. Here's gross margins, 56% in Intel. I mean,
do an overlay of Qualcomm and Intel stock. I mean,
here's
dramatic.
Look, I'm just looking. Here's the P's of Intel, nine versus what is that group? Where am I? Right here. So hold on, I gotta move this here. So this is the P. So the median P, 38.4%. Intel, where is it? Yeah. Sorry, I have the.
Well, I'll tell you this: since the crisis, since the crisis, Intel's down 17%, Qualcomm's up 62%.
Yeah, I mean, I haven't been reading about I don't know, maybe the technology's coming out right now. Intel's behind, but especially for maybe the mobile or 5K, but that does look like, at least from a fundamental perspective, you got still high margins, you still have decent growth in revenue, net income. So not maybe NVIDIA does have much better growth. Anyway, something to look at, but those semiconductors have been coming back a little bit because I have seen them popping in there. Here's solar that's been popping in, a lot of times. 72% of those were higher yesterday. So that's just a quick look at the industries. If you don't have any questions, well, I'll move on.
Yep, you can move.
Okay. Let's take a look at the implied volatility movers. So here we're looking at different options expirations and at the money volatility for those options expirations. So you have the stocks here, the different options expirations, days to go. We have the at the money implied volatility, the change yesterday. This is the volume, option volume on that expiration. This is the implied move. So if you're buying a straddle, selling the straddle's implying a move in this situation, 56% in either direction by January 15th expiration. Okay, this is a lower price stock. So let me just take out the lower price stocks real quick. All right, so at least $10. So here, mRNA, this is the name of the company. It was down 7.5%. This is its market cap. This, we're looking at this expiration, January 15th, 12 trading days to go. Implied volatility was up yesterday, 15.4%. They traded 61,000 contracts on January 15th expiration. The straddle is implying a move of 38.2%. If you're buying a call, buying a put, it has to move 38.2% to break even. More than that for you to make money at expiration. If you're selling it, it has to move less. This compares to historically, the stock moved 24% on average in the last 6 years over a 12-day period. Okay, so we're looking at what historically the stock actually moved on average versus what the implied volatility is suggesting now. So if we take that ratio, implied divided by the historical move, 1.6, okay? Because now the implied is above the historical move, 1.6. This is showing the biggest move it made in a 12-day period in the last 6 years. You can see this stock really can move 355%. What is this patent group? Capital Markets. Let me just see what they do. Mining digital assets. It owns cryptocurrency mining machines and a data center to mine digital assets. So now they're in the business of mining cryptocurrencies.
Yeah, there are lots of businesses like that.
Right.
I didn't know they were publicly traded. What's the stock symbol?
MARA. So this is the to $11, $692 million market cap. And I don't know what's involved with that, except like, are you just putting up servers and like climates that are cool, something like that, where you just, I think what happens is, how did those cryptocurrencies work? It's servers that are,
well, it depends on the currency
tasks, and you get like a fraction of a cryptocurrency or something like that.
You get rewarded, yeah, through the blockchain, doing equations. Right.
Yeah.
And but I think some are different than others. They're not all the same. So, it's interesting. It'd be interesting in what they're mining, obviously the Bitcoin.
Yeah. Right. Yeah. I guess as it grows, well, probably you would think this stock would be doing well with the cryptocurrencies going up, yesterday down. So, but I don't know that much about what this business is. Anyway, that's how, you would just read these lines here. So let's take a look at, and I'm going to go show some seasonality, but what I was looking at is to see where maybe we could find straddles that are underpriced relative to historical moves going out. Let's say we go out to February. What's February 19th? So in general, right now, implied volatilities are low. Here, I'll show you. Sure. So we see that implied volatilities in relative terms are right now have come in a lot. So here, I'm going to show you a snapshot of the market. So here's SPY. Here's the implied volatility, relative. This is its 52-week high low. We see right now it's in a 28.7 percentile rank. So that's saying that in the last year, 28.7% of the days implied volatility was lower than this level. The rest were higher, right? And you could see this for all the sector ETFs. Utilities 17%, 28%. So in general, the implied volatilities are low. If you think that implied volatility will increase, right now we're kind of in January. January, usually we do see implied volatilities come in, then start ticking up after January. I'll show you the seasonality here. I'm going to go into here. Let's take a look at the seasonality of implied. So this chart here is showing us on a seasonally by year. So this isn't a 1-year chart. This is actually historical seasonality. It's taking the average implied volatility per day, going back from 2014, including 2020. All right. So what we see here is we're right now here in December, end of December. We see January kind of comes in, February starts to tick up. So here's the median implied vol going from 13. January ticks up, so maybe wait a little bit here in January, but we see February it starts to come back up. Okay, so just kind of like we'll keep that in mind right now, but take a look at what we could find in February. So coming back here, I selected the February expiration. Let's take a look at ETFs, and let's take a look at where this ratio, so the implied move is below the historical average move. So we want this ratio to be under 1, okay? Because we want this to be below this. So I'm going to put below 1. All right, and we got 7 stocks here. Some of these, here's a clean energy ETF. So we see here February 19th expiration, 35 days to go. The implied move right now in either direction is 14.9%. In other words, about 15% in straddle. Historically, over a 35-day period, this moved on average 21.5%. So we're looking at a ratio of 0.7. Of course, then you would have to have the assumption that there should be a catalyst to make it move between now and February. Clean energy, that's been actually pretty active sector, right? With the change in the administration, the assumption is that we're going to be moving towards a more aggressive clean energy policy in the U.S. So this has been kind of popping here. We're right there at the 52-week high right now. Again, you'd have to have the outlook that there's going to be movement in that sector. If you do, then this is a pretty good deal. Another one pops up, China. Right now, we're looking at February 19th expiration. The straddle is implying a move of 5.8%. Historically, in the last 6 years, on average, this stock moved 6.2% after a 35-day period. All right, so if we're taking that ratio, 5.8 divided by 6.2, 0.9. If you feel like, maybe, right now, maybe January we'll see it come in a little bit, but February we start seeing it tick up. Again, if your outlook is, hey, we're going to get some volatility, either, and there's a case for both sides, right? Either if we're printing money and inflation expectations just keep rising, these stocks could really just pop, right? With no earnings, because people want out of cash. Or if it's very overvalued and it comes back in, it could be, we saw the valuations are really high. But again, that's FXI. These are Chinese large cap ETFs. Let's take a look at that seasonality. So this is SPY. Let's take a look at FXI. So this is historically, we see it's been trading. So this long line, that's the long-term average implied volatility. And then this is the seasonality line. So we see here it does trade in December on below that long-term average. Looks like, it's a little bit choppy in January, starts rising in February. So let's take a look at the median implied vol. December 20.1. That's the median where we are right now. Ticks up a little bit in January, 21.5. February, 22.7. Even in March, continues on 23.2. Again, if you're just looking at, maybe if the implied vols are low now and your expectation is we're going to be rising, this is just one way to kind of filter out candidates. We're at 9:30, Will.
Awesome job, Dima. Last show of the year. Everyone have a great final day of trading and a great start to the new year. We'll see you on Monday. Right, D?
Everybody have a great holiday. Happy New Year. Thank you so much for all your support this year. It's been great. Thank you for watching the show. Stay safe, everyone. Hope to see you guys on Monday.
All right. Peace. Happy New Year, everyone.
Monday, right? When's
Yep.
the next Monday?
Monday's the next show. All right.